if this is live, but if it's live, sorry I'm late. I've just been sitting in my office. I didn't even know what time it was. Hang on. So we need our rock and roll music. Play me some rock and roll. Isn't it funny? There's one channel on all of YouTube in which I can play music and not get flagged. And for some reason, YouTube just wants to give me exotic cars, girls in bikinis, and wood chipper reviews. All right, so let's find it. This is it. So I guess you're here. All right, give me a couple moments. I got to get my addiction on. My God, Bud Fox, I wish you could see this. Morning, buddy boy. Money never sleeps. Yeah, boy! Chicken, Slim Shady. Pointing his you-know-what at you-know-who. But he's so cute, though. Oh, I guess that was our music. Good morning. Oh, I have to throw down a marker. Wait, I don't have that page open. I guess I can't. So, anyways, I think you can see. Okay, that's good. So, 3, 2, 1, hit it! Good morning, beautiful people. How are you doing? Happy Monday. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please try to be small and humble. Focus on the long term and never risk money you cannot afford to lose. So, guten Morgen. Thank you for being here. Sorry I was a little late, just doing schoolwork. And sometimes I just lose track of time. But anyways, it's very interesting stuff. Meanwhile, the markets are moving. Isn't that cool? So thank you for being here. Thank you for being part of the Forex.Today YouTube community. 16,000 plus currency traders just like you, just like me, getting together. So it's approximately 8 o'clock in the morning. What that means is you may have already traded gold and oil, and you might be waiting for news at 8:30, which is pretty typical in the foreign exchange market, and maybe there's some news at 10. We also know the stock market opens at 9:30, and the London boys come back from lunch. So, I don't know. There's a lot going on this time of day, and I'm grateful to have you here with me at this particular time so that I can answer your questions. I'm here. The raison d'etre is I'd like to share the, almost 20 years of experience that I've been trading Forex. So if you ask questions and get involved, very cool. We can do technical analysis, fundamental analysis. I suggest we go through the calendar. Yeah, let's plan out our trading week. But ultimately, you're the boss. Hang on, I'm looking way over there because for some reason YouTube wouldn't open the normal thing. And so now the chat's way over here. So if I keep looking over here, it's because the chat's over there now. Typically I can pop the chat, but anyways. So anyways, get involved and ask questions. And I'll do my best to help plan out the week, help plan out some trades for tomorrow. Maybe the rest of the week, maybe the rest of the month. But are you on next month's trades? Over on this screen, which is actually flipped for me. So over here, on that screen, I have December's USD CAD trade. I know you can't see it, but I'm like, next month. Okay? But a lot of people are like, what do I do with something right now? Well, what was your plan yesterday? So anyways, we can go through all that. Why am I here? First of all, I like you in my life for the positive energy. I like you in my life because it helps me also focus on what I need to do to improve as a trader. I like working with you and addressing your questions about tactics and strategy, because it reinforces the lessons I've learned over years and years and years. It's very easy to forget these lessons. Much of history is just forgotten. I'll remind you that 1,000 years after the Romans left England, the English thought that all the beautiful architecture and buildings and these giant statues were built by a race of giants. Turned out they were Italians. So anyways, very interesting. You could easily forget everything. So thank you for being here. I answer these questions and it reminds me, the good and bad and ugly, of not just my sort of rules of engagement, because there's not that many, but how I got to those rules and why those rules formed. So anyways, I preach to myself as much as I do to you, so that's really cool. Now, Traders Way is the sponsor of our community. That's really cool. You're a trader. They're a broker, so they would like traders that actually know how to trade so that you can put money into a trading account. They can provide you with a service, and you don't disappear after 2 weeks because you blew up your account. Instead, you could trade for 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 months, 8 months, 9 years, 10 years, 20 years. And that's the kind of client they want. So education is the first start. And so that's why I'm here. So anyways, thank you very much. And this is what I was talking about over there. Over there is a USD CAD. And this one's interesting because, and the reason I'm backed out here is the December trade, as you know, or should know, is just above 31. Somewhere around 31 and a half last week is what we talked about. And the plan B is way up there at 32 and some change. There's also a daily 21 and a whole bunch of other wonderful, interesting stuff. That's the December trade. What's the date today? The 16th of November. We're exactly halfway through November. This is a December trade, in my humble opinion. What do you think of that? Maybe you took it last night in Asia, but the issue is it's not a last night trade. It's not a today trade. It's not tomorrow trade. It's not even a next week trade. This is next month's a trade based on your analysis of December. So I'd like to ask you silently, and a response would be appropriate. You don't have to say it out loud, but are you planning that far ahead? And what would you do if you managed $1 billion? Would you be nothing but short term, what's going to happen in the next hour? Right? Would you get into trades every couple hours if you were managing $1 billion? Or would you plan things out a little bit more? Check this out. Join 11,000 Forex traders. Well, there's 16,000 of us now. Look at that, 16K. Very neat. So what I wanted to do here, JMO's at 31.14. Very cool, man. Boy, I must tell you, it's such a beautiful morning. So I live in quite a modest house, but the light is just amazing. You can walk around going, man, that is amazing, just the light. So I'm in a cheery mood. Such good light. Most of the leaves are off the trees now, so there's a little extra sunshine coming in, which is good, though, because if it was summertime and I had this much sun on the house, we would roast, right? But wow, how beautiful. Okay. Okay. Asia is going to be important. Okay. So one of the things going on in Asia right now, of course, is this idea that Biden will not be a tariff boy. Okay? So Biden doesn't tariff China, President Biden, President-elect Biden, doesn't have a White House that tariffs, but maybe even remove some of the restrictions that the Trump administration had placed on China. That would be good for Australia. You're like, it has nothing to do with Australia. I know, right? So what else? The second thing that might be going on is the worst is over. We're getting closer to a solution, or at least a band-aid to COVID, which means if the worst is over, that means more up than down. Okay, more global expansion than down. Like the contraction is near the end. We may be in a trough. Like for example, I'll just draw on top of this. Let's say, because economists do this, by the way, they do this all the time. They make a chart and they say, here's potential GDP. Okay, and we had an economy that 2008 kind of went like this, and then we were kind of working our way up, and then it was COVID. Okay, so what we're suggesting now maybe is that we're sort of in this spot, not even up here. We're just here in the cycle of potential GDP. So you could call this GDP prime or star, GDP stars. Okay. And then this would be, right, actual GDP. And I guess I'll do that one black. Just, okay, GDP. Okay. That's actual GDP, what we're doing. And I mean, we're in this spot here, not here, but projected, this part here would be the projected part. So maybe I'll make that a slightly different color. I know what you're saying. Okay, this slightly. So that's the projected. This is actual. This is potential. So what I'm saying is with COVID, with the potential solutions, or at least a strategy to address COVID globally, then maybe we're here. Like the worst is over. We've stabilized. And let's say the next 6 months, slowly back up. Okay? If that's the case, that we start to improve over the next 6 months, and then 6 months after that, vaccination globally is just rolling out like, wildfire. So we get back towards potential GDP and then above potential GDP, right? In that case, if you believe we're in that zone, that little spot right there at the trough, you could be buying Aussie dollar. Because we're talking, by the way, global GDP, not US GDP. Okay? So you're betting now the contraction is done, expansion is in the future. Okay? And remember, all markets, whether it's Forex or the stock market or the bonds or whatever, they're always projecting the future. The future. So we have to decide, well, where are we actually? Okay? So if global GDP will expand, there will be additional global trade. China's economy will recover because Americans are buying more stuff. Europe will be Europe. And anyways, Aussie goes up because of that. And you would look at Australia, and first of all, there are RBA meeting minutes, right? And you'd listen to Governor Lowe's speech. But you would look at things like, external data for Australia. So again, if GDP is equal to C plus I plus G plus X minus M, okay, you would want to be looking at X. So if you're buying Aussie dollar based on global GDP, the bottom of the trough and the convergence between actual GDP and potential GDP, you would probably see Australian GDP, right? You'd break it down. This would be an Australian issue, right? This would be an Australian issue. This would be an Australian issue. This is them exporting outside their country. So that would be more related to a growth in actual GDP towards potential GDP. Australia would export more, Aussie dollar would weaken. Actually, no, sorry. They would import more, so the Aussie dollar would strengthen. Sorry, I was thinking US. Aussie dollar would go up because they would export more than they import. Okay? Because remember, when they import, they're getting rid of their dollar. So they're doing some, obviously. But if they export more, they're sending away products and services. So those, theoretically anyways, they weaken because someone else bought them. And in exchange, they have to get rid of their local currency, buy up Aussie dollar, which would increase demand for the Aussie dollar, which then pushes up the value. And so Australia exports iron ore and coal, right? And in return, there's an increase in demand for the Aussie dollar. Cool. You got it? Sorry, I didn't expect to do economics lecture. Sorry, I haven't done economics in like 2 years. So anyways, that's what's on my mind. RJ's like, dude, I got this. All right. So Tuesday, Norwegian GDP, U.S. retail sales, Governor Lowe's speech. Well, let's go with the big thing being retail sales and Governor Lowe's speech. Although if you're trading Noki, this is going to be important. But what I suggest first is you track Brent on top of Noki. Or Tesla sales in Norway. Wednesday. Okay, CPI. What kind of inflation do we have? You know, when we're nitpicking like 0.4 versus 0.5, it doesn't matter. Okay, this is pretty low. Okay, it's quite low. That's all that matters, right? So, all right, kitty cat. Yeah, well, we know, right? We want to know how they're doing as well, the Canadians, eh? Is the economy doing well? I mean, it's interesting because a lot of the inflation in commodities has to do with not a demand for production, but production dropped. So, like, for example, if you were going to build a house today, you'd probably have to pay 300% more for your lumber. If you're building a skyscraper, you probably have to pay 300% more for the steel. But it's only because you're buying inventory, not, fresh off the press kind of stuff. And what's happened is, let's say steel production dropped because COVID-19, people didn't go to work or whatnot. And then those that buy the steel to then resell the steel or make something out of the steel so that you buy a steel product, like they take the roll and they turn it into an I-beam or something, right? Or they make the sheet metal or whatever. So they make a product of you have the raw material like iron ore, and then someone mixes it with coal and makes steel. So now you have kind of like an intermediate input or something. Now, that means, though, if you stopped building your skyscraper for a while, or if you deferred it, that those products, those intermediate goods, sat in a warehouse doing nothing for, let's say, 6 months. So now when you show up to buy it, they're like, well, I can sell you what I got, and I desperately need you to buy it. But the thing is, I can't get anything new because it's going to take 3 more months to get new inventory because they're just starting up the factories, right? So now what? So they're like, well, you got to buy my inventory at the normal price plus what I should have been making the last 3, 4, 5, 6 months during COVID. So now, let's say you paid significantly more. I don't know if it's triple, but, let's say you normally pay $1,000 a ton, suddenly you're paying, 2,200 a ton. And of course, that'll drop as supply picks up, but there's a lot of inflation. And so it's interesting to see sort of the open market raw material price versus what you're actually buying. Right? So imagine sometimes you've probably seen in life where oil prices are down, but it's the same price at the gas pump for your gasoline. You're like, well, why is that? Well, first of all, prices are sticky. And second of all, there might be a ton of gasoline. And as we draw down those inventories and it gets low, then gasoline prices will go up. So there's a sort of that whole supply chain you got to pay attention to. So we'd like to see Canada doing well because remember, Canada, we sometimes we dumb down Canada and say, oh, it's oil. No, it's oil, it's gold, it's diamond, it's wheat, it's beef, it's timber, it's nickel, it's silver. I mean, the second largest deposit of nickel in the world, I think, is in Hamilton, Ontario. Like it's got everything, right? Everything. What else did I miss? Bad TV? High school alcoholism and teenage pregnancy. I think I should have thrown those in too. But they're really good also at nickel. So it represents pretty much everything. Although most of it, I think, goes to the United States. French fries and mayo? No, I don't think in Canada. Hey, man, I haven't been there in a while, but that sounds more like the Dutch or the Belgians, right? So anyway, student loans. Student loans, yeah. Well, I was having, my wife and I have very open, candid debates about things like money and investment and all that kind of stuff. I don't like to pretend I know everything because she's smarter than me. But one of the things we talk about is I think I would want my children to take low interest government backed student loans. 60% of the people at Harvard, I think it's even more than that, get student loans and grants and stuff. And they'll tell you, when you go to Harvard, they're just like, yeah, you sign up for this and you get free money. Because they get it free from the government. So everyone's like, yeah, get on this gravy train, right? So you get, let's say, some free money, but let's say 90% of what you get is low interest loans that are sponsored by the government, or you're getting them directly from the government. Well, how much? So let's say it's hard to put it in words. Here's my thought. Right? You take out $100,000 student loan, right? Just whatever number it is, 100,000. Maybe it's 200,000 for Harvard. Whatever. You take out $100,000 student loan. You get it at low interest rates for long periods of time. You could take 20 years to pay this thing off. You get almost like prime rate. Okay? Then what? Well, compared to that to what you could have done with that $100,000 if you had the money to pay for it in the first place. So I told my wife, as soon as they graduate with their master's degree and they set out in the world, you take that $100,000 and you say, hey, congratulations on your master's degree. By the way, here's $100,000 towards your down payment to your first house. Now, the degree never appreciates and it never pays you interest, right? So why would you pay $100,000 to go to Harvard when you could put $100,000 in a house that goes up in value? Right? The loan never goes up in value. The degree never goes up in value. But the house goes up in value. So I'm like, yeah, let the house pay for the student loan. You know what I mean? That was my thought. But like I said, she's smarter and better looking than me. All right. So just food for thought. We could have this could be an interesting conversation that we have someday, but not today. So anyways, watch kitty cat. It represents to me, let's say, how about the production of all commodities? Australia kind of represents the export of all commodities because it's a bigger deal, I think, exporting from Australia to China. Like exporting from Canada to the United States is like, falling down the stairs. It's pretty easy. And then, right, and then Aussie jobs. So this is all about the Aussie this week. You guys agree with me too? Thank you. Okay. And then we're ending some retail sales, blah, blah, blah. Right, great. Interest rates in China. Okay, well, pay attention. Really, like if you can get something to read about this, this would be more interesting. Okay, cool. By the way, I am getting close to launching the book club, and that's such a horrible name to call it. It's so much more than that. But once again, please in the comments here, let me know specific books. Like literally go to the Amazon.com website and throw down the link, or I might actually set up a page where you let me know specific links, like you put the links in and we start aggregating some of this information and finding what you guys really want to start with. Again, trading stocks, trading bonds, trading Forex, trading commodities, trading real estate, starting hedge funds, trader psychology, history of finance and economics. Like, would you want to go back and study what happened in 2008? See, that wasn't COVID related. That was a collapse of the financial system. And maybe you have a vague understanding of, asset-backed securities, securitization, the derivatives, how all these things work together. What were the side bets on the housing market? All that kind of stuff. We could dive into all that kind of stuff. Okay? But we're going to do something amazing in probably the first 6 months. So let's say in the first 6 months, I might throw out this big, hairy, audacious goal. I heard somewhere that the average CEO reads 50 books a year. Okay, the CEO of a Fortune 500 company. So I thought, well, why don't we read 50 books in 6 months? Because I don't want to be an average Fortune 500 CEO. I want to be the best. So I will need your help because I read slow. I don't read good. But as a team, we could break this up and we could knock out 2, 3, 4 books a week if we wanted to. Certainly 2 a week, let's say. So in the first 25 weeks of 2021, we could as a team, we could read 50 books and be well ahead of the curve. Now imagine what you know now. I help you every single day in the webinars. Maybe you've taken some of my video courses at FX Bootcamp. Maybe you're in some of my live groups. Okay, so you got all of that. But on top of all of that, imagine now you have the knowledge of dozens and dozens and dozens of books focused on finance, economics, and trading and everything that goes around that. Imagine now you could, at the same time, take 20 college classes all at the same time. Now, you can't be at 20 different classes at the same time, so you're going to need buddies to like sneak into the class, sit down, take notes for you. Oh. So that could be very interesting, huh? Young Gun says, production says, hey, my goal is to open my own hedge fund. So that, for me, that's down the road. Maybe the end of 2021, we'll start a program for that. Because I have a few dozen people that are on that path right now. And the easy part is to, call up a lawyer and get them to to create the proper documentation and legal structure for your hedge fund and all that kind of stuff. Now, you may not know how to do that, but I can sprinkle some pixie dust and you got it. But why spend all the money if you don't have a 3-year track record? And in particular, not just a 3-year track record of you being profitable or even worse, making a ton of money. You have to have the right track record, or otherwise you'll never, right? So we have to focus on that first. And once you got a 3-year track record, oh, and by the way, you need hundreds of thousands of dollars in cash. And you're like, I don't got hundreds of thousands of dollars. Well, I can fix that for you. But you'll have to have it. Like, you can't go to someone and say, I'll just make up a number. Give me $100,000 for my Forex fund. Okay, good. How much money do you have in your Forex fund? None. I ain't got no money. But I'm really good at trading. They're like, well, if you're really good at trading, why don't you have any money? You see the conundrum there? So like in venture capital, if you become a general partner in a hedge fund, okay? Or in a venture fund, okay? You're a general partner in a venture capital fund. You raise $100 million to put into seed level stuff. By the way, that's a micro fund. You're tiny, a peon, right? You're a frozen pea in the world of venture capital. You only have $100 million. Okay, you're a general partner. You have to put in at least $1 million of your own money. Otherwise, limited partners don't have the mandate to say, we'll take all the risk. This idiot with no money who's dead broke is going to manage our $100 million for us. Like, it doesn't make any sense, right? So you really got to you got to be prepared. So yeah, you can start the structure. You pay a lawyer, you call up a lawyer. Can you create a hedge fund for me? Yeah, you got money? No. Well, even if you got the money for that, great. Now what? Now you got to get a compliance firm. You got you get an accounting firm. You got to pay for all the regulatory stuff. So, for example, and I don't know what the number is now, but like on the very first day when I started my hedge fund, right? On the very, 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 very first day, I don't remember. It's been more than 10 years, whatever it was. So I don't know what the number is now. Okay, you pay the thousands of dollars to set up the company, and then thousands of dollars to set the other things up and get everything running. And then you got to set everything up to get a compliance team. And every time I say set up, it's 10,000 here, 10,000 there, 10,000 there, right? And then you got to apply, become a member of the National Futures Association. So you got to go through all of that. And then you have to pay more money after your membership. You have to pay more money because you're a Forex trader. Why? I don't know. You have to pay extra money for that. A lot more. So now you have to pay for your membership, but then you have to pay for the other thing. Then you got to pay for your Series 3, and you pass the Series 3 now, which is a very, 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 very tough examination. 70% of professionals that take it fail. And once you get all that, now you're ready to be licensed and registered. You know what the last step was? You have to have a net cap. Okay, a net cap requirement of $30,000. Now, it's probably a lot more. It was that back then, right? So check this out. Once you've spent all that money, you have to have a minimum of $30,000 in cash sitting in an account. What does it do? Nothing. They say it's to protect your clients, but it doesn't make sense. But it doesn't matter if it makes sense or not. And if you want to start a Forex brokerage in the United States, I think the number is 2 million. Not like you have 2 million, like you've started all that, or you have a net worth of 2 million. No, once you start it all and get licensed and registered and do whatever you need and hire all these people and get an office building, all that kind of stuff, when all that is said and done, you have to show $2 million in cash in an account that you can never touch. Okay? So it's just interesting, right? So it's not for poor people, but if you can put together the proper track record, there's a way to get it done. Of course, that's what I'd show you, but probably not this year, because right now we have a couple of dozen people that are well on their path to creating what is the most important thing: a conservative, disciplined, low volatility, consistent return track record of success. You can't do that, it's not worth the money. It's not worth the investment. Okay? All right. Okay. La 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 la. All right. So there we go. So going back to where we are here on KittyCAD, okay, as I was saying, we have a monthly pivot. We have a lower high after a lower low. Okay. And what? Weekly sell zone. Anything else? Daily 21, which is the bearish aggressive sell price. And so if you're already a bear, that's that. But as I was saying before, all of that is good and all. What I'm interested in is this is what I project the December sell to be. So I meant by this is a December trade. Young Guns Production says that, their goal is to, right, because I don't know your pronoun, so I'll say there. 15K to $1 million. So 15 to 30. Well, I guess I'll do it this way. After 1 year, you'll have 30, 60, 90, 180. So 1, 2, 3, 4, 5. Yeah, so it's going to take you 8 years. If you are ridiculously sickening, unbelievably amazing, you double your account every year without fail. That's 6% per month without fail. So you're on, let's just dumb it down and say you're on a 10-year path. If you're very good and you're very disciplined and you're very patient. Is that what you're thinking? Yeah. Now, I will teach you guys whenever I do it. Like I honestly, like I've gone through it where I've actually like checked out the exact microphones I would use in these meetings and stuff. But there's in the model of how to become a professional Forex trader, there's a way to speed that up. Not by a lot, but I think to sort of even the keel a little bit, to lower the stress of doing it. So you might, let's say, if you go my way, I could probably cut 3 years off of that, which really isn't that big of a deal because it's so abstract. The difference between 7 years and 10 years in our human mind, we can barely differentiate the difference. Now, if you're counting the days in jail and you've spent 7 years in jail and you got 3 years to go, you got a good idea what another 3 years is. But other than that, we don't really know what an extra 1,000 days is. But there's a way to do it with a lot less stress. And dare I say, less stress, but it could be a heck of a lot more fun. Because if you got this stress, you will fail. It'll be the thing that brings you down. And you're like, you haven't even started your hedge fund yet. And you'll bring it down. You'll have 5 good years, but you'll just be shell-shocked. Okay? Anyways. So that's what I'm thinking between now and the end of the year. So I'm throwing that out there. I want you to think about that. Okay? That is what I think you should be doing. Some of you might not even be thinking beyond today or even beyond the New York trading session today. But I'm also throwing it out there. You can think about the rest of the day, the rest of the week, the rest of the month, and next month, all into the end of the year. Okay? And then you can drop in those smaller time frames and fit those in. Okay? And you'll have all these ebb and flows, up and down, right? And that's where you can think of like, Elliott Wave, for example, would say, well, there will be a period of down, a period of up, and then an extended period of down again. Okay? So you have 1, 2, 3. Oh, I guess you can't see it here. Elliott Wave would suggest this is pretty normal. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. Right? So you want to fit that in. Okay. My crazy analysis is more like, this ebb and flow. That's the bigger one to me. And that this year will be different than the last or the next, that this pattern was the expected pattern. Isn't that interesting? And next year it'll be slightly different than that. This year will be better than the last. Oh man, we gave up a whole lot today, huh? Too bad. Too bad, so sad. We could take a look at Kiwi Dog. Okay, so there's the daily steps. Okay. Is that daily or weekly? Those are weekly, aren't they? Yeah, weekly. All right, so does that look bearish yet? Where's the kill switch? About here? Sorry to give you the double negative. Now you're going to say, no, it doesn't look bearish. Yes, that's the kill switch. And you're like, yes and no, no and yes, yes. And I'm like, oh. But anyways. Ron, are you still out on the West Coast? Still working on your tan? Oh, you gave up Beverly Hills, huh? Yeah, back in the GA. Very cool. Wow, just such a beautiful day today. I didn't do Off the Charts with Wayne McDonald yesterday. It was gray and very windy, and then it started kind of raining a little bit, and right? So anyways. Okay. So let's add a little more data to this, because this only shows me based on a bias. Okay? Okay? It's only based on a bias. Doesn't mean it's true. Okay? But it does tell you that there's no reason at the moment as a bull, because this is only bullish. These are all just bulls. It says, just chill out and relax, let it work its way out. Okay? Now, if you're a nervous Nelly, you can throw in like a confluence here and say, oh my God. Yeah, but this is sort of like almost a moo trade, where like in this example, we knew to expect unusually high prices because of the election, that this month's, the November pivots are based off last month, but last month we had, you know, contraction, or let's say risk was taken off the table, volatility dropped because we were waiting for the election. So obviously then when the volatility, and a lot of it returns to the market, well, we're going to blow through the pivot. So that's the cool part. But, right, is it the time to get out now? Well, depends on the pattern you're trading, of course. All right. So M2 predicts this area. Okay. Now it's out of position. So you know you ride the 4-hour 21. This is standard swing trading. And then you get to this profit target. So there's the new get out zone. And the new get in zone is this zone here. If you're only looking at weekly pivots. Now looking at this, the monthly pivots say, wow, we're out of position, but you don't necessarily sell out of monthly out of position, right? So one thing that you could do here is find out which one's monthly. Okay, it's that one. And say, okay, monthly is no longer helpful because we've already blown the doors off of it. Monthly would be helpful if you're setting up next month's. If you're setting up December's trade, then that would be helpful. Okay, if you're tracking the weeklies, then the only thing we know here is it seems to be technically up, and that this is the exact buy zone, and that we're riding the 21. So you would expect, you know, let's say by Wednesday or Thursday to be up there. Of course, if we're up there today, it sets up a counter trend, and even a bull doesn't want that. And you don't want to close high, because then you're out of position next week, and that would bring it down. So ideally, you just sort of fart your way up here by late Wednesday, and then Thursday is a little profit taking, and then Friday, you got that off of this. That would be like perfect. Oh, Richard, yeah. So about starting the hedge fund, yeah. We'll, yeah, that would be probably the end of year, early next year. So let's say 1 year from now. But I thought what I would do is I would write it down as a book. So I'd write a book on how to do that, and then create some courses, because it's very helpful to be able to go through it, right, in great detail. And I mean all the way through to like literally delivering the pitch, standing in front of an audience giving a pitch, or holding a cocktail standing by a swimming pool and you bump into someone, and how do you talk good, right? So the whole thing. So then I would want to do some of that in videos, but then have a live group. And we actually had this plan. So it's not like I just made this up. We had this plan about 4 years ago. And the idea was to do it in South Africa, in Cape Town. We picked out the hotel. We contacted the catering service. We contacted the helicopter service, because what my idea was to fly up to wine country from the coast. So imagine you're on the beach, right? And we jump into helicopters, and off we go up into the high country where they have the wine vineyards, and have a dinner there, and sort of all this kind of stuff. Like we priced out the helicopters. We talked to the vineyards. We got all the details on food and hotel and cost of the projectors. Like, it's all been done. Right? So that's a way of saying, like, I truly want to do it. It's not just a thought. Okay, cool. All right. Right. Cool. So there's that. So this Kiwi going up, you have to understand my bias here. Kiwi going up is exactly the same, for really even the same reasons, that I would say USD CAD down. Same thing, right? Numerator denominator. That's the only difference. That's why right? So, Richard, do you want to meet up in Cape Town? All right. So here's our pig dog. So is there another leg up? Is there another leg up? Well, let's change this from the point of view of a bull, and we can do, well, let's start with monthly. So here we are. Position trading, bullish bias. The green zone is where you would buy for this month. And check it out. That's where we are. Okay, very nice. So that's that. So if you were bailing on this, it's because you're taking profit. Okay. And one of the things we discussed 2 weeks ago now is that if you were going to be that kind of person, right, like take the money and run, you don't wait. You do it early. And the risk you're taking is you get out too early. But that's it. It's an opportunity cost, no big deal. I never agree with if you're going to be a nervous nilly and you're like, should I get out? Should I get out? Should I get out? And you wait for these giant pullbacks. It's not the right thing on the long run. Okay, and I talked about that last week, so I don't have to repeat. So now this is a monthly play. We're still bullish. It's off of a roll reversal. So it either goes up now or we're out. I mean, that's it. So what should we do to analyze our current situation? Do we stay in or do we get out? So now, okay, so now I want to look at this because some people are going to look at it this way. Let me draw this out for you. Half the market, no joke, half the market sees this. Okay? And the other half of the market sees this. So you better know what you want. Because if you're trying to figure everyone else out, well, it's impossible because it's 50-50. So we need to now increase our conviction for whatever we want to see. So now I'm going to change my template, not position trading anymore, swing trading, bullish bias. And there's this week's. And to me, that increases my probability now, or at least my conviction, to say, well, if I was going to buy it this week, I'd buy it at this price. And therefore, since you're already a bull, that's what you're thinking. And if you don't get that, back the heck off. Okay. Okay. You'll see this, it'll be an important battle. Huh? So right now, like, how do you stay calm? What do you focus on? Well, we have resistance above us. You want to kind of look at trouble spots in the past. What do you know about the moving averages? Well, you know, right? Oops, let's make this fatter. Right? You know that if you're above this, you should remain bullish. I don't know how patient you are, but you should remain bullish. There's a couple of other things going on here as well. For example, if we do get lower lows than this, it's going to be a problem. Technically. First of all, we'll probably breach that 21. First of all, we've already made this low. So to go lower than this would be no longer bullish. In fact, it'd be lower high, lower low. So what we're risking right now is mostly today. Okay? If you're a bull and you are bullish, you want to keep it above this low. And in fact, what you're actually hoping for is this. And by the way, it opened beautifully in Asia, right? Oh yeah, this was beautiful in Asia. It was just great. So I'm hoping that, you know, this is sort of the pattern in the near future. Okay. So now your kill switch is like, well, you don't want it lower than that. And ideally, of course, we don't make a new low today. That we've already established the low. Does that make sense? Like New York can do whatever it wants. We already had our sort of bullish rally. That's great. And so we respond to today's headlines. But, you know, by the time we're in tomorrow, we'll test that. And then we'll, right? And there's maybe Wednesday. And as long as we're making higher highs and higher lows, it's cool. Lower low, not cool. Okay? Because what that sets up is, this is, as you should know, an incredible bearish sell. Unbelievably obvious, right? So if we get this now, you know, forget it. Give me my money. Give me my money back. I don't want this trade anymore. Okay? What if the dollar strengthens, and how does this deal with the Fed's projection? Long term versus short run. Long run versus short run. That's all it is. Okay? If there's headlines about COVID-19 getting worse, see, I think the biggest thing for 2021, and this is just a wild guess, Biden comes in, we haven't rolled out what is it, the antibodies or the vaccine or whatever. So we don't have it quite ready yet. Maybe for the most, vulnerable, but let's say there isn't a full bore rollout of vaccines until summer, okay? And we go into January and we find out a whole bunch of people get horribly sick because of Christmas. Everyone's warned, don't get together for Christmas. Don't get together for Christmas. So everybody gets together for Christmas. So we hit January, the depths of winter. We got a new president of the United States, and COVID just crushes America. And to show that Biden will live up to his campaign promises, and he's not Trump, and he'll handle it differently, and he's brave, and he's strong, he'll shut the shit down, and the economy gets locked down. He's like, lock it all down. Everybody into my basement. Come on, everybody get in the basement. Okay? And we all go to Joe Biden's basement. And that's where the dollar gets strong. That's my wild and crazy guess. Okay. What do you think? Any thoughts on that, guys? By the way, I will set it up so I'm ready to trade it. So we know it can't happen until after the election. So we're talking about the beginning of February. Yes. FX Noob, absolutely. If we shut down the U.S. economy, the dollar will get unbelievably strong. Not even a little bit strong. And China will be devastated. Australia will be devastated. Canada will be devastated. Europe is Europe. Nothing changes in Europe. There's no way to fix it. Then what? I don't care. I'll just buy a heck of a lot of dollars and make a ton of money. Doesn't matter. See, we're absolute, guys. We're absolute. We're non-directional. It doesn't matter. Dollar gets strong, so what? Make money. Dollar gets weak, so what? Make money. Well, okay, so like pure mathematics is if dollar's strong, debt is huge. Well, let me expand on that because it depends on what you mean. But you're right, maybe, depending on what you're saying. But let's put it this way. If the dollar gets strong because COVID-19 shuts the U.S. economy down for another 3-4 months, then South Africa will just be, how do you say it? Devastated worse. Like the magnitude will be worse. Not that COVID-19 will be worse, but South Africa, their debt in rand, their debt will skyrocket. The rand will drop precipitously, which is another way of saying their debt goes up. So like it'll be devastating to emerging markets with US dollar debt. Say goodbye to Turkey. And all of this really for a political statement or stand. I mean, I don't blame Biden. I think he'll do it if he has the chance. And I don't blame him. It's the right political thing to do. But it'll be horrible for Turkey. Turkey is already in an unbelievably bad place, but that would be it. That would be it. Turkey would be, that's it. And I don't know, I guess riots in the street, Erdogan, get rid of Erdogan. I don't know. I really don't know. Typically it doesn't lead to anything good though. Okay. Okay. Why is gold going up? Watch last week's video. It might have been Thursday or Friday where I explained it to you. Unless it was in the swing trading group. But I know I explained it all last week. Okay. Sets the stage for the United States to provide a solution for Turkey. Well, Biden doesn't know where Turkey is. I know he was on charge of some panel for decades, in charge of national security, but I don't know. Oh, was it Benjamin? All right, so sorry. If you were in my live trading group, my swing trading group, you would know why gold is going up. But anyways. But I don't think America cares, to be honest, is what I'm trying to get to. I'm being a little facetious. Biden knows Turkey, but we don't care. And that sucks if you're Turkish. Like, dude, no one's coming for you. And you're lucky, I would also say. Imagine you owed everybody you know money. And all of a sudden, like, you're climbing into your apartment from the back alley so that no one sees you. You know, people knock on your door and you hide under your bed. Like, you know, that Turkey's in a situation like that. But anyways. All right. So, yeah, the United States is going to work on the United States. Okay. Let's go to some yens. So someone says stimulus in January. The thing is, you have to remember, there isn't good or bad in Forex and in most of investing, really. Okay, you might say stimulus good. Stimulus comes out, here you go, $600 million. Well, the issue is we expected at some point way more than that. In fact, $1 trillion more than that. So by the time it comes out, it's like, yeah. I also have a very scary theory, and you know, I was at my friend's house over the weekend, and we were talking about this because he's into politics, and I'm into economics, and so I'm like, hey, I said this all happened before. Over the last 2,000 years, this happens repeatedly, and if we get to a point, and maybe Biden is the one to do it, where we say quantitative easing doesn't work because it only makes people rich. Well, it makes rich people rich. But the problem is the income disparity now. I think we talked about this last week sometime about the JOLTS report. Okay? Where it just shows like the people that need a job, they're just not qualified to, right? You're just not qualified. You're like, I need work. Do you know artificial intelligence? No. Forget it. There's no work. But if you know AI and or you know some programming or you know all this, you're like, no, I got no degree. I got no high school. I need a job. Sorry, dude. We don't need that. We need that, right? That's not what the economy is providing. Okay? I mean, and I don't mean that in a bad way. I mean that's a factual thing. Like, right? That's, if you look at the JOLT report and there's models to use it and stuff, but there's like a huge amount of jobs available and a huge amount of people not working, but they don't match. So what'll happen is, to end the riots in the street and to close the gap on income disparity, the government will step in and just give people money. That's it. Stop rioting. Here's $3,000. And that'll work for a little while. And then there's more rioting. And then you're like, here's $5,000. Just leave us alone. We're rich. Leave the rich people alone. Here's some money. Just leave the rich people alone. Go do whatever you do. Here's some money. And what'll happen is people will say, hey, wait. Every time we riot, we get money. Every time there's civil disorder, we get money. Well, shit, that's a hell of a job. So why don't we organize and all of a sudden riots in the street as a career? Because you'll get more money. But my point is, in the beginning, it does start as altruism. But it ends with the entire country collapsing. Whether it's the Romans, right? Or not. Like, it goes back years and years and years and years and years. it will lead to the end of the collapse of the society. So that's my worry, because it always starts with good intent, right? It always starts with good intent. But as a capitalist economist, I'm a capitalist economist, that my thought process leads one to another to another. Now, maybe if I was more of a, let's say, European model capitalist economist, it's slightly different. Or the Canadian or Australian, New Zealand model, which is not the European model, but not the American model. So there's different forms. They're all democratic. They're all capitalist, all that kind of stuff. But like you change the variables a little bit, right? So like in Europe, there's a lot more social structure, or let's say safety net. But because of it, there's inherently double the unemployment rate in Europe than the United States. So you can ask yourself, well, why is that? Well, it's a consequence of the decision, it's not good or bad, the decision on how to redistribute capital. So why does Spain always have 10% unemployment, where it's the end of the world if the United States has 10% unemployment? What's the difference? It might be okay to be out of work in Spain. They have better social infrastructure for that. And then you go to Japan or China, and they have the world's greatest, by far, household savings rate. People in Japan and China save and save and save their whole entire life. Why? There's no social infrastructure. They save like crazy their whole life. Yeah, Mr. Highvolt, I'm glad you brought that up, because that's part of kind of what I'm saying too, right? So there's a consequence to that, but that's also good. So like saving money versus spending money, and all that kind of stuff. Yeah, so all I'm saying, like, there isn't bad, right? There isn't bad, there isn't good. I'm not even suggesting the United States is better than Europe, right? What I'm suggesting is there's differences. Yes, democratic, great. Yes, capitalist, great. But there are different flavors. Ice cream isn't ice cream, right? So, but there are consequences to that, right? Saving more, having more social security, let's say, well, that's less consumption. That's right. So you look at GDP, for example. GDP is C, well, I'll do that, right? Plus I plus G. Let's just, this is a closed economy. There is no imports or exports. Okay. So in that case, because you save more, there's less consumption. But because there's less, right? We'll say this is the same. Businesses are businesses, right? And then the government has to do more. Okay? So savings means there's less consumption. And with more social welfare. And by the way, when I say social welfare, it throws off red flags. It's actually a term. I don't mean it like a welfare state. Even that throws people off. It's not probably what you mean. I'm not being radical. It's just more like with more social infrastructure. It requires more government spending, right? And so the consumers spend more, but the government spends more. But the government's not buying TVs from LG, right? The government isn't buying Samsung phones or iPhones from China or South Korea, right? So the government spends it differently, but let's say they balance each other. Let's say $1 trillion less in consumption because you're saving, the government spends $1 trillion more, so GDP is the same, but what you're buying is different. And the outcome of that would be, well, let's say a higher unemployment rate. But maybe it's because young people are unemployed because they have free university. So they hang out and they go to university and smoke pot for 4 or 5 or 6 years. Right? Because it's free. You're like, well, I don't really want to work, so I guess I'll go to university. Right? So it's just whatever. There's just a consequence. But then again, your kids are not weighed down by student loans, right? So whatever. But what I want you to focus is not on good or bad, but more of like the inherent differences. So now like maybe this explains when things are good, right? The euro dollar goes up. When global macroeconomics is good, euro dollar goes up. Much of that has to do with the United States importing and exporting, in this case, exporting or importing significantly more than they export. So that would weaken the dollar. But what do they import? Let's just dumb it down. What do they import from Germany? Mercedes, BMW. What do they import from Italy? Right? Ferrari, Lamborghini. Okay? And now their economy are doing well because they're exporting. Germany is like the second or third largest exporter in the world. It's amazing. And I think the Dutch do like crazy amounts of agriculture exports too. Like it's really impressive. So when global GDP, going back to what I was showing you earlier today, when global GDP is expanding, you'll see like, oh, euro goes up and dollar goes down. Is that good or bad? It's neither. But if you understand the flow of money, we can turn a profit. Mr. Heivell, Europeans think Canadians are nuts? Canadians are nuts. They're kind, sweet people. Oh, you mean Americans? Oh, well, I'm not an American. Great country, though, America. No, I know what he means. Great country, though, America. It's not perfect by any stretch of the mean, by any stretch of any mean. Yeah, I know. You know what's interesting, though? I think about, like, America, the upside, like, almost all, it's really funny. Almost all my friends from the 1990s in the Silicon Valley, early to mid 1990s, like from 93, 94, 95, they came in from all different countries around the world, right? Young kids, couple of years programming experience, well educated, of course. And now almost all of them are multi-millionaires. Some of them have 50 million in the bank now. And they were not rich when they showed up. They weren't poor either, but self-made people. So I have to think like America, what an amazing country where you can come here as an immigrant. And if you're smart and you hustle, boom. Right? Got it. You can do this. It can get done. But then you're driving down the streets of the Silicon Valley and there's potholes and all the houses are old. They're not even insulated, right? And there's traffic and a lot of it is ugly and it was never planned. And all this stuff, and you're like, this is horrible. And then you think of China would go in and just bulldoze the entire Silicon Valley and put up brand new, beautifully planned urban center, and it's just beautiful, right? And so it's funny where you're in this place in the Silicon Valley, and where you can make millions and millions and millions, and there are self-made billionaires there, and yet the vast majority of it is poor and dirty and poorly planned and organized and ugly. And you're like, oh my God, this is the richest. Boom, boom, boom. Oh, did I just hit a pothole in the middle of the freeway? You're like, oh my God, right? The richest state in the richest country. You're like, oh my God. Then you fly over LA, it's a third world country, unless you're in Beverly Hills. Oh my God. So it's funny. You're like, wow. So the greatest, but it's not perfect for sure. Canada's nice, but it's not entrepreneurial. Okay. Canada was a great place to grow up as a child. And if you're a normal person, and I'm an abnormal person, if you're a normal person and you go to university and when it's done, you get a good job doing something, you can get a nice house and live a nice life and, right, have a couple of kids and a dog and, get a truck and a snowmobile and a snowplow and a cabin at the lake. Kick ass, man. Kick ass. Awesome life. I used to watch like Batman, and it was dark, and they'd be in Gotham. And then the bad guy lived way up the top of a building in like a bell tower, and he had these crazy weird windows, and he'd look over Gotham and say, ha, 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 I want to take over the world. I'm like, I want to be that guy. Seriously, I'm like, that guy's cool. Look at that guy. Yeah, it's funny. So in Saskatchewan, you're like, how can I become a nemesis? Also, I don't want to be evil, right? But I want to be that guy. I want to live on top of the skyscraper. Yeah. And that wasn't available in rural Saskatchewan. But a pretty amazing place to live. Great country, Canada. But to me, United States, it's also a great country for different ways, and it fits my personality better, I think. But Canada's beautiful, and the people are awesome. What do you think of this? So that's 4 hour, but here's what I'm trying to show you. So that could be what? The plan of the day, plan of the week. Okay? But you go out to here. So maybe that's the plan of the day. Maybe this is the plan of the week. So let me do the one in blue. Plan for today. Oh, that was supposed to be blue. Plan for today. Plan for the week. You see how they all fit in with each other? But now check it out. Like you go further out. Now look at the weekly chart. And, right? What do you think of this technically? Down, 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 up, up, down, 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 down. Like I'm almost trading like monthlies here. Down, 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 up, up, double bottom, higher, high, higher, low. What's the, like, let's talk about this. Could we be here by the June Fed meeting? June 2021. 7 months from now. Yeah. Hey, by the way, Mr. Highvolt, where are you located? Was it Holland? Belgium. Oh, yeah. I have tons of Belgian friends. I love Belgium. Never been there though, but oh yeah, I'd totally call you up sometime. Yeah, no. I have a great experience. Back when was it? I think when I had dinner with the royal family of Sweden. It was international diplomats, right? This is back when I was in a nonprofit organization. You know, George Soros, drop name. whatever. But it was back at that time. The thing is, and here's the problem, because it actually fits kind of funny into what we've been talking about. I'm Canadian in America. And so this nonprofit I was in was American, right? So I get invited as an international diplomat to this thing, and we're in the castle. It's the old city hall on the water there, and there's a blue room and the golden room, and you know, if you're from Stockholm, you know this place. So anyway, so we're in there, but I'm walking around. I'm like, I didn't actually know the Americans because I went as an alumni. It was after I retired from the group. So I'm walking around. I'm like, I don't really know the Americans, right? They're the people that replace the people I replaced myself with, right? Like it's like I don't know my second cousin twice removed, right? So I'm like, I don't really know these Americans. And so I walk over to the Canadian delegate table. I'm like, hey, what's up? I'm Canadian. They're like, hey, what's up? So we drank some Crown Royal, and I'm like, yeah, I don't really know these guys. And then I just bumped into some people, and we just hit it off. I think what it was is they were tall, good-looking people, as all Dutch people are, right, Mr. Highvolt? Or, sorry, Belgian people. Sorry, not Dutch. I said that. That's the worst thing you could possibly say. I apologize. Belgian people. Anyways, these guys were tall, good-looking, and they had sashes on over their suits. And I'm like, oh, my God, these are, like, beautiful people. Like sashes, like a sash, a Belgian sash. I'm like, silk sashes. Like, I don't have a sash. Like, damn it. How come I don't have a sash? Right? Like, wow, look at these guys. Holy crap. So I'm like, I bump right into their conversation. I'm like, oh my God, where do I get my sash? Like, I left my sash at the dry cleaners, right? And they started laughing. And we just totally hit it off, right? And they're like, you sit with the Belgians. You sit with the Belgian table. So we were out there, and I just partied with them. Then the next day, we actually went out into Old Town Stockholm and just partied it up and just hit it off. Just amazing, amazing people. Love Belgians, man. I have another friend from Silicon Valley, moved to Silicon Valley in the 90s. Now he went back to, actually both of them. I know two guys from the 90s. One of them went back and bought a castle. Boom. So I can go to Belgium. He's out in the country somewhere, but he bought a castle. So anyways, like, I love Belgians. Let's go, man. So I'll look you up, Mr. Highvolt. So America is quite a country, like it really, truly, that you can, it doesn't matter if you're Indian or Dutch or Belgian or German, right? All these guys I'm thinking of just have crushed it in America. What a great place. And I'm very thankful to have lived here and all that kind of stuff. And I like the entrepreneurialism. I think it needs to be stronger. And I think that's the most dangerous part that America needs to realize is China might be more entrepreneurial, and it might have more of a, China number one spirit. And America used to be America number one. We can do anything we want. We just have to work together, and America can achieve anything. And that's what China is right now. And that entrepreneurial spirit and that us versus everybody else, us versus the world mentality, I think could be very challenging to America. And I think that is, the most thing is that spirit will be a challenge for America, I think, in the future, as we go from only having one superpower in the world to having two. Right? And you might say, well, what happened to Russia/Soviet Union and all that? Does anyone know if this is true or not? Somebody told me Putin is sick, like seriously sick, not COVID, but like Parkinson's or something. Does anybody know anything about that? That Putin's been locked away and he may not be running it? Was it? Yeah? That's interesting too, because I thought Putin was the smartest guy at the table. But if he's not at the table, there's going to be a vacuum. Well, I'm more concerned about the vacuum. Right? So there's scary things, and I don't know if this is a good example, but sometimes it pops in my head. So whether it's right or wrong, good or bad, I don't know, but it always pops in my head. So America goes in, takes out Baghdad, goes in Iraq, takes out Baghdad, and gets Saddam Hussein. So he's out. And then the consequence of that vacuum, there's death squads roaming the streets of Baghdad, killing people based on their religion. And I'm like, oh my God, well, if Saddam Hussein was the guy stopping that, maybe it was better. I mean, like, again, that's such an extreme example. Like, he was a bad guy, but maybe it was a solution at the same time. Like, the vacuum is scarier because if you know he's a bad guy and you can control him, maybe, right? But so sometimes the vacuum is scarier. So what does that mean? China just takes over all of Russia? Like I don't know. Like, what happens if Putin's not in control? At least Putin was smart and he had like a 25-year plan. But who do you get now? Putin wasn't crazy; he was smart. What if you get somebody crazy? I mean, I don't know. So that's interesting. It's going to be interesting, I think. Luis, are you talking Russians or Chinese? So the biggest thing as far as two superpowers, is the cycle of money goes like this. USA, I'll put here. I know I'm not, I guess I should do it the other way. We put China here, USA here. Okay, we'll do it that way. Okay. America sends money to the interbanking system. Okay, they send money here and it's converted. Is it R or something? Okay, and converted to Chinese money. Okay, but that drives up the value of the Chinese money. And by the way, America does this so that, right, China sends stuff. Okay, so toys go to America. Money first goes from the United States into the interbanking system, gets converted. So now globally there's more dollars. That's why it weakens. The value of the Chinese currency goes up, but that's just one transaction. And the second half of that transaction is whatever China made goes to the United States. But then there's a problem. The Chinese currency went up. So then China sends the RMB back to buy dollars to the United States to buy bonds. Let's just call it bonds. And that goes back to China. Okay. Yeah, I wanted to know the symbol though, Peter. Was it that looked like rupee when I drew, but whatever. Yeah, RMB. Okay. So that's what has been happening for 25 years. Okay. Dollar weakens as we send it to China, and then China sends it back and dollar strengthens. And we try to balance each other out, but we know there's more imports than exports. So the United States exports bonds, imports TVs. That's how you could really look at it. So you can do it this way, right? The United States exports bonds, but we import toys. Okay? And meanwhile, this kind of balances it out. But we import more toys than the bonds we export. So ultimately, the dollar is weaker. And therefore, China must find a different way to balance this equation. So they use other tools to try to weaken this through other means. Oh, yeah, thank you, Yuan. Yeah. Thank you. You see what I mean? So everyone manipulates. I kind of chuckle when they're like, China manipulates their currency. Everybody does. But whatever. So that's China's central bank has to have a mechanism in place to artificially, or let's say, influence the yuan down to balance the equation. Okay? So now what? What if this changes over the next 25 years? See, this assumes China is an exporting nation, but we know they're well on their way to creating a domestic economy. So how are you going to behave now? And how you behave 50 years from now could be different. That's the bigger question. I like China, but I wouldn't invest in China per se. Like, I mean, it depends on what you mean. Yeah, building a couple of, apartment buildings or starting a company, that's one thing. But I think if you were going to be, let's say you were a billionaire and you were going to invest billions, I'd go to India. Because I've been all over China. Chengdu, Beijing, Shanghai, Hong Kong, Guangzhou, Shenzhen. It's all built out. You should have invested in China 20 years ago. And in fact, I think the way it worked is when I was in Beijing, they were ripping down the old parts of town and putting in new buildings. And so they've probably finished all that. So now all of old Beijing is gone, but now they're ripping down the new stuff that was there when I was there 20 years ago. They probably ripped that down and they're replacing that. Because in China, a 20-year-old building is old. You got to get rid of that. So, there you go to India and there's no infrastructure. So I've been all over India as well. Right? Like, right, New Delhi, then up to Chandigarh, down to Rajasthan, Agra, of course, and all that kind of stuff. So, and it's India's hit or miss. Like, there was one airport I was in, beautiful, brand new airport, and then you land in the other airport, and it's welcome to the 1960s. Right? One airport in India was great. I was with a few buddies and we get down there and it's like this, I mean, literally it's a room and they actually had a bar at one end I'm like, how nice is that? And it was like 1960s, but it was small. It was basically, once you got through security or whatever, it was just like a room and you're just waiting and everything is old, like just old, 1960s. You can almost imagine cigarette smoke and everything is, 1970s colors, whatever. So I go up to the bar and I'm like, hey, do you make margaritas? And he's like, yeah, I make margaritas. So boom, I buy everyone margaritas and another one and another one and another one and everything's good. And finally our plane's ready. And I tipped the guy $20 and he broke out into tears. And some other man, not in our group, he stood up and he's like, you paid him more than he makes in an entire day. Like, you really made a difference to this guy. I'm like, hey, he makes wicked margaritas. But you're like, so you go from that and all of a sudden you get to another place, right? And the airport is beautiful, right? So what I'm saying is India's got the infrastructure play, right? That's where the investment should be going. Because you can keep investing for the next 25, 30 years like we did for China. China's done. It's beautiful. They've copied the best German subways, right? Because China's great. They'll buy one German subway, and then boom, suddenly every city in China's got something that looks like a German subways, right? So, yeah, Pakistan probably could use some infrastructure building too. If I was in Pakistan, it'd be, I'd love to see that. I mean, it's a beautiful part of the world, but I've heard the Pakistani Punjabi food is better than the Indian Punjabi food, and I think the Indian Punjabi food is fantastic. So I'm like, oh my God. So, the flow of money is what's interesting, okay? The flow of money. And this is the model that's been working, but I think it's potentially, or almost certainly, depending on what period of time we're talking, going to adjust. And that would be, what we need to be watching it. So the lesson here that I just drew out on this currency pair, which is euro yen, here's maybe the trade of the day. Change the time frame. There's the trade of the week. Last week, this week, okay? And then this could be the trade for most of 2021. And do you even conceive of such things is my question, or at least maybe you should, when you're buying. So we had this lined up down here, right? 2021. When you were buying here, were you thinking 2,000 pips over the course of 8 months? No. Could you? Should you? Maybe. If you were a large institutional investor, would you? You probably, is what I'm saying. Oh, is that right? You're Punjabi on the Pakistani side? Nice! Oh, man. How far are you from the Indian border? Like, how far are you from Chandigarh? Almost certainly in my lifetime I'll be back in Chandigarh. I have so many friends in Chandigarh. Such an amazing place. I'm thinking like I must have 6 or 7 Punjabi friends. Grab the gap. Okay, now grab the gap. What gap? All right, so anyways, just food for thought. Do what you got to do. Let's just let's run through the commodities, and then I guess we'll just call it a day. My oh my, WTI. So it's 10. 10. So I've taught you to be there, ready, willing, and able. Amerstar. I don't even know where that is, sorry. Oh, in Lahore. Yeah, I know Lahore. Yeah. Oh, that's close. Yeah. Oh my God, that'd be a fun day. I probably need permits up the yin yang to cross the border, though. Huh? Maybe I'll wave to you from the Indian side at the border. Yeah, risk off this week. Yeah, I'm okay with that. Remember, I'm thinking longer than the week. Yeah, I think, yeah, so anyways. So what else going on here? So WTI, my oh my, WTI. Okay. So once again, okay. So is that it? 1500? What is it, 4 hours? That's not right. So what is it? We've crossed over, right? So that's, no, it hasn't crossed over yet. So that's 10, no, that's 9, 8, 7. There you go. So whether it's this one or this one doesn't really matter. But notice, once again, what I taught you last week is if you're trading gold or oil, I've taught you how to be at exactly the right place at exactly the right time. So you either do it or you don't do it, right? And then take a look at BTC. Here's our roll reversal. Look at the gap. Oh my God, just exactly what we talked about last week. Look at that. 15.8. Oh my God. I didn't see this one. I didn't see this one last night. Oh, shoot. Look at that. That's nice. Anyways, I'm not a big Bitcoin guy anyways, but well, yeah. So all these things you need to be, and when you're in my live groups, right? I'd say 90% important is the time you're at your chart, not the technical analysis, not the fundamental analysis. There are certain points in time, whether it's an intraday trade, like I just showed you, right? The one, if you're not at your charts at 7, forget about it. Just don't do it. You're not doing it right, so why do it? Then the second thing is the right time of day to be doing your day trade. There's one time. There might be a couple other times, but generally, there's one time. You can't do that. You're not doing it right, so why do it if you don't do it right? Right? Often, what you might find, guys, is you're pretty decent at technical analysis and fundamentals, and I show you my technicals, and you're like, oh, that makes sense, and then you start applying it at the wrong time of day, and you don't get the results you expected. Well, you're doing the right thing at the wrong time. Right? You know how to drive a race car. You watch them on TV. You got a general idea how to drive, and you even know, right? But you go into the corner from the wrong angle, even a little bit. It's going to slow you down, right? Like too hard on the brakes, too light on the brakes. You accelerate a little too wrong. You got the wrong angle. If you don't tap the brake to get the nose down on the car, you won't be able to turn. Right? Like you need to do the right thing at the right time. A half a second too late in racing is a mile too late. So if you're going to swing trade, there's an exact time to do it. If you're going to day trade, there's an exact time to do it. If you're going to intraday trade, right? There's an exact time to do it. And if you're not at your charts ready, willing, and able, already with a plan in mind, you're ready to go, hot to go, HOTTOGO. If you're not there, finger already on the trigger because you know exactly what your intent is. If you don't know that, you're going to have problems. So I hope you at least take my advice, write it down, and explore whether it's true or not. I'm okay with that. As long as you're starting to change your behavior and think and test and reflect. Brendan went to a Punjabi wedding. Yeah, I've been to a Punjabi wedding and fantastic. There must have been, I'm going to guess, 300 people serving food and drinks and making the food and drinks. 300, not guests, servants, for lack of a better word, waiters, servers, cooks, and just amazing. That was the trip, in fact, where all the guests at the wedding stayed at the Taj, and I stayed on an Indian chicken farm. Oh, let me tell you some stories. Holy smokes. You know what 10,000 chickens smell like? Yeah, literally I did that. In fact, I was wearing, I had gone shopping. I bought what I call my Indian tuxedo. I bought it all beautiful, green silk on the inside, black. I look like Neo from The Matrix. And I'm leaving the chicken farm in my tuxedo, and the car shows up, right? I'm walking toward the car. I get surrounded by wild dogs jumping up and down in the dust and dirt and everything. And one dog jumps up on me and gets his foot caught in the pocket and rips my tuxedo. And like makes it all dirty. I'm like, get out of here. And anyway, so you get in the car. And off we go to the Taj, and then they take us out to the event. And it was just funny. So, yeah, I decided to stay on a chicken farm for like a week, I think it was. And also, I visited the slums, and I helped plant trees at a school. I was in the local newspaper and stuff in Chandigarh. And it was just funny because my Indian friends are like, you're so white. Why would you go to the slum? Why would you do it? I'm like, just take me. And they're like, no. Honestly, they're like, no, I'm not taking you to the slum. I'm like, come on. I met the guy. He's going to be there. The guy that runs the whole school and all that kind of stuff. There's going to be hundreds of kids I get to meet, and they're going to sing a song. He's like, that's so stupid. All my friends were like, that's so stupid. We're not going to do it. We're not even going to take you. Like, you're kidding me. You're not even going to take me? Like, I don't know how to get there. Finally, I got them to take me. It was really funny. So we went there and had this great time. I used to have pictures of it. I'll have to find it. But anyways, India. All right. So I guess that's it for the day. Yeah. I guess I'll see you tomorrow. Right? Remember, write this down like time of day. I want you to start thinking about it. Time of day. Whether it's time of the day or time of the week or time of the session, time of the month. Honestly, like put those things down. Do your own research. Let's say you don't have, 300 something bucks to take the courses at FX Bootcamp. All right, you got no money. Let me tell you how to do it for free. Okay? Ask yourself basic questions. Write these ones down. What is the best time to trade the New York session? What is the best time to trade the London session? So trades that you're going to be in for 4 hours each or less. And then say, what is the best time of the day to day trade? And then, to a trade you're going to be in all day, if you're lucky, a couple of days. And then what is the best day or time to be trading, swing trading, right? Swing trading. Trade you'll be in 3, 4, 5 days. And then if you made one trade per month, what is the best time to do that? And go back through 35 years of data. Or pay the damn money and learn. One way or the other, you're going to need to know this stuff. Because showing up at the wrong time to do what you think is the right thing is not going to lead to the results you want, but it will lead to frustration at best, and at worst, bankruptcy, right? So it's more, you need to know more than how to trade a 5A cross, because there are probably 22 5A crosses in which you should ignore. You can't dumb it down like, I'll only do this. This is why these courses that people try to sell you, like, all you need is the MACD. When it's oversold, you buy it. When it's overbought, you sell it. But we all know that's not true, but you've probably been pitched courses like that. And what they forget to tell you is, well, it's overbought because everybody's buying it. And by the time the MACD crosses, you've already missed it. You probably didn't get out, and you probably didn't get in, and you hadn't, so like, you can't oversimplify, but you do need to know the right time to practice your art or to show up and execute your strategy. It's very important. It's a key thing. It's not on your chart. It's not even fundamental, but you can put it on your watch. You can program it in your phone. So my phone does this, breep, 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 and I'm like, I tell my wife, I got to go. I got to trade. No joke. It's on my phone. Not all the time because I'm always in front of my desk. But like market opens and stuff, absolutely. Just absolutely. Like, I got to go. I got to go. This is the time for me to deploy capital. Not 4 hours from now. Not 6 hours from now. Now. I got to go. Right? And I want to get you there. Okay? I want to get you there. So not only do you know why you're trading, not only do you know how through having proper strategy and techniques, but you even know when. And you'll improve. So please thank Traders Way. Show them some respect, I suppose. And the way that you do it is you go to tradersway.com, open up a demo account, let them trade. Or you play some trades, let them execute, and you'll see things like fast execution speed, narrow swaps, big spreads, all that kind of stuff. But give them an opportunity to earn your loyalty and respect. You don't have to do it just because I said, my name is Wayne, I am the leader of this community, so you need to do it. No, just please, if you could, let them earn your business. Right? Let them prove to you that they're the broker that you've been looking for. Peace on earth. May the pips be with you and your profits be above average. And no, I don't make money on your trading, by the way. So it's not like, oh, he's only preaching that because if I open an account, he's going to make more money. And I'm like, no, you don't understand. So stop fighting and start listening and loving. Because I love you.